And what about gold, Christian? So we know that silver, there is a huge demand on the industrial demand, so more than 50%. What about gold in industrial demand, and what is compared to silver the production of gold each year?
So it's a very good question, and something we talk about quite a lot is gold's dual nature. And by that we mean we describe the market as being self-balancing, and that's due to the different elements of demand that we see. And it's really key to understanding gold's diversification benefits and its potential source as a its potential as a source of long-term returns. So the way that the market is structured is on the demand side, we tend to have jewelry and technology, which account for about 40% of annual demand. They're the kind of elements which are linked to economic expansion. They're pro-cyclical. So as incomes go up, we tend to see demand for gold jewelry and technology, which contain gold components, increase. So that's supportive of demand. Now, the other major category for gold demand is investment. So that counts for about 42% of demand, and particularly identifiable investment, kind of gold investment that we can measure. And this, while an element of it will be pro-cyclical, we will see demand for small bars and coins from retail investors. When we see economic expansion, this tends to be mostly responsive to risk and uncertainty. So as we saw last year, and I'm sure we saw with silver, is that as the COVID pandemic took hold, as we see greater levels of risk and uncertainty in the market, safe haven demand will come in from the investment side. We will see investment into products from the institutional side. So last year we saw record levels of inflows into gold-backed ETFs globally, I think in the region of 800 to 900 tons. And so it really shows that there are different drivers to gold demand on any particular year. Some are pro-cyclical, some are counter-cyclical, and because of that, it brings an added level of stability to gold demand and the gold market more widely. Now, on the supply side, we see between 4 to 5,000 tons of gold brought to the market every year. Now, about 75% of that tends to be from mine production, so that's gold freshly dug out of the ground, where the remaining 25% being from recycled sources. So recycling is a huge component of the supply side for gold, which helps bring a kind of a nice balance to the supply side. When we see that demand is far higher than we might have expected, or the price increases, that will help draw out some of that recycled stock and help kind of maintain that balance within the market between the demand and supply sectors.
And do you think it's mine production stable or not? Because at the end of the day, the mine production is the inflation on the gold supply, no? So is the mine production decreasing, increasing in the last, I don't know, 5 years?
So we've tend to see over the last 5 to 10 years that gold mining has been increasing between 1 to 2% every year. Last year was a bit of an outlier for the reasons that Mike kind of explained, that COVID obviously had a big impact in terms of the demand and the supply side. We saw similarly kind of impacts on mine production, with temporary closures of mines in certain jurisdictions, which impacted the overall annual figure or annual level of mine production that we saw last year. But gold mining has been remarkably stable, and if you think that it's mined on every continent bar Antarctica, that kind of geographic dispersion again brings a level of stability, where you see impacts in one jurisdiction, it won't severely impact the overall level of global mine supply that we see.